Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your Stockminer Brian Johnson, making professional trading simple. Welcome to the Sunday video. Now, there is no trading tomorrow, which is Monday, Martin Luther King Day, obviously. But the rest of the world, gasp, does not celebrate Martin Luther King Day. So they will be open. They will be going about their business, and they will be trading. So that always leads to when we have a holiday over here, the rest of the world doesn't celebrate. They do their thing. Now, if something happens, bank failure, bad earnings overseas, those type of things, those can drastically affect, not just affect, but drastically affect the open of our next trading day, which means something major happens. Don't be surprised if Tuesday we open up or down by a large amount. It could be as many as, well, realistically, 10 to 20 points if something very, goes really wrong, which is pretty much a basic trading day as if we were open over here in the States. So sometimes that happens. Just want you to be aware of it, especially if you're still in positions. Obviously, if you're flat the market, it isn't a big deal to you. We are also still in some earnings seasons, and we will see how this all plays itself out as we progress this week. Big things. Let me see here. Let me take a quick look. There are Ameritrade and I think Citicorp are reporting Tuesday before the open. Let me check that. Yes, Citigroup and Ameritrade before the open, IBM after the close. For some of the more major names, bigger names in the market. So be careful and be aware of those companies reporting. We didn't start out all so well with JP Morgan, but anything can happen during earnings season. We have seen mostly a run up in the most recent earnings seasons that we've had. So whether that will keep going, it has yet to be seen. So let's break into the markets. What we saw though on Friday was a giant dip downwards in the markets themselves. You can see the Dow coming back down, breaking through this major resistance of 10,600, but as I mentioned, it did not close below 10,600. So we did break some pretty strong support levels here, and there may be some bigger bearish action to come. I know there are some larger publication sites out there that are predicting this to be the top, this 1150 area on the SPX to be the top. I respect every one of those publications. They have been around a long time, and but let's keep in mind that some of those publications have been calling tops now for the last few weeks, and it just hasn't panned out for them quite yet. So just remember to continue to watch the charts. Let the charts tell you when we're breaking down. I mean, when the bears are really about to take over, believe me, the charts will tell you. It will be obvious. And just watch those major levels of support and resistance. Those being, of course, on the Dow, 10,500 first, then 10,200 to 10,250 for the Dow. So if we skip ahead and take a look at the daily, you can see this big red candle we got on Friday. This has the bears crossing their fingers, most assuredly, and we are so due for some sort of a larger pullback. But how many times have we seen this? We have to be and remain cautious. We can't just jump on board until we know more, and that is a break below this 10,500 would be a great start. More importantly, a close below 10,500 would be a great start for the bears, because you can see where we have gone on a run up with what appears to be a giant run down, only to be met by here, buying, here, buying, 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 little move down, buying, major move down, major buying. So we have to be very careful that if you're bearish in nature, that you don't get your hand slapped again, or your paw as it might be. So be very careful, wait for these breaks of these levels. Now, think about it. If we are really going to break down here and the doomsday scenario plays out and we do crash to new levels, getting short below 10,500 or even 10,200 certainly isn't going to leave you in the lurch. We were talking about the potential for the Dow. Some are talking about the Dow as low as, 2,000 or 3,000 or whatever it might be. And if that's the case, believe me, getting in short at 10 500 or even 10 getting short at 10 200 as opposed to 10 700 or 10 500, yeah, I don't really care so much. It's not going to make that big of a difference if the fall takes place like that. So you remain logical in where you take your entries. Don't rush. Let the charts tell you where to go. Okay, moving on to the NASDAQ, we can see here on the 60-minute that what have we started here? Well, gee, a big push up. Here's that little base sideways, and now we're getting to a little bigger base sideways. Still looking for a push above 1890 to be bullish or below 1850 to start looking to get bearish, especially below 1840 would be a more major level with this 200 period moving average rolling up and through here. That then would take us back probably for a retest of this area here, which is about the 1815 to the 1818 area. This, I believe, this gap up was the 1818 mark. So continue to watch this. Notice how well it got above this, held, crashed through it, resistance, 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 back down to the 20-day. So if this bearishness keeps up, watch and be very careful, especially in the tech stocks, of earnings. Apple, Goog are coming out very soon. I think Goog's I think it might be Tuesday. And if I'm not mistaken, Apple is maybe the 26th, about a week later or so. But you want to be very careful with these tech stocks and where they go. They always tend to have usually the stronger outcomes when it comes to earnings season. We'll see if that keeps up. I think Google may be, Intel did well, so no reason to think that maybe IBM won't do as well. And then Google, now it's had some issues with China, but I don't know if that'll make a big difference or not. All I'm saying is be very careful if you're long or short these stocks, especially holding over earnings. You know, you guys know if you've been with me long enough, I hate holding over earnings. It's gambling. Just take that money to Vegas. NDX on a weekly, you can see us with a little red candle here, finishing about where we were last week for a low. So really, no confirmation here yet. Could this be a bearish engulfing? Yes, sure it could. We need confirmation. We need to get back down into this area to really start confirm that bearish move or that pullback on the weekly. So be careful in this because we've seen this move up and move down only to go sideways, high base, and then push up again. Maybe that's what we're starting here. That's why I'm saying watch your charts, be very careful. SPX on a 60-minute, notice the action we're getting. Same type of thing, very large trading range here from 1150 to about the 1130 area. 1130 250 on this particular chart. But you know, the 1130 mark for me has always been a heavy level of support. I'm still holding to that. I really think that's a big mark to get underneath if you're bearish on this market. Once again, if this is the next move down and you get in short below 1128 or 1130 or wherever you want to get in, and this thing ends up going to below 600 or whatever, you're not going to care that you missed out on 10 points at the top. You can't always call a perfect top. That's not how it works. SPX on a daily, you can see here holding nicely above this support area yet and closing up there above that support area. We didn't close at 1130 but have not closed below it. That will also bring us right back into the 20-day, which is at 1129. So 1129, 1130, 1131, that whole area in there should be pretty staunch support. A break of that is what you'll be looking for. Maybe the bears pull the bull trick, and that is gap below it, come back up to revisit it, and then retreat from it once again. So be watching Tuesday morning where things open. SPX on a weekly, you can see that little red candle as well, but only, I mean, there's no engulfing, nothing like that. So still waiting for some confirmation on a weekly time frame to see if there's any big bearish move down on the markets. VIX on a daily, will continue to watch this, but you can see if I skip right to a weekly, we're watching this dotted line here, and just, you know, blatant fact is we're right in